Take a look at how the markets are faring now. The JSE is weaker along with its global peers as Russia's invasion of Ukraine heads toward the 2-week mark. President Vladimir Putin reiterated that the war will continue until Ukraine accepts his demands and halts resistance, dimming hopes for a negotiated settlement. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us to talk us through the latest market moves. A happy Monday to you, Petri. It's a sea of red on the local bourse. Talk us through some sentiments influencing trade.
Good morning. I think it's afternoon time, I guess. Good afternoon. Yeah, a lot of negativity. Hey, I think what we saw over the weekend, really, I think for the next week or so, probably maybe in a bit longer, this Russia-Ukraine situation is going to dominate news. We're actually in a very interesting position. Obviously, with what's happening there, the price of oil as well as sort of soft commodities and wheat in particular have gone through the roof. And if there are continued tensions and no resolution to the situation, we can expect higher prices in these two commodities for a longer period of time. That puts a huge amount of upward pressure on inflation. And that already was a problem before this conflict situation. So we're sitting in a situation where we have potentially record high fuel prices, potentially record high food prices, and a tightening cycle from sort of the big developed world central banks, right, where we have rising interest rates. So unless we can resolve this situation in the Ukraine amicably, in a very sort of relatively quickly, it looks as though there are some major economic headwinds. There's a lot of sort of jargon, fancy choosing your words there, but basically, if we don't resolve this issue, the spillover effect on the commodity markets, the energy market, is going to be potentially big enough to cause sort of a larger scale global type of recession, right? And I think that is the fear that is currently driving markets and sentiment at this stage. We saw essentially, I think going into the weekend there was this little air of like, well, anything could happen. And nobody wanted to hold risk over the weekend, so we saw markets come off relatively sharply on Friday. That, over the weekend, no real progress was made, right? There were a couple of threats and some posturing coming from Russia, but it seems as though the tensions are not easing, right? So it looks like there might be another meeting between Russia and the Ukraine, some talks in a couple of hours from now. But so far, the position is very clear. Russia is saying, get off our lawn, basically, and NATO is kind of daring them to the point. So it's until there's a resolution, I think that we're going to trade headline to headline. I mean, if you look at, for example, how oil traded this morning, it traded up to $138 a barrel when oil futures opened up this morning. So just for context, a month ago, the 7th of February, we were trading around $92 a barrel. Currently, it's trading at $126 a barrel. So that's like 30% more, right? So these energy prices are going to be relatively a big driver of markets in the coming weeks until we find some sort of resolution.
And to that point, pray tell whether it has impacted this move. Gold prices bursting through the $2,000 mark, while palladium hit record highs.
Yeah, so obviously, gold is considered as one of those safe haven assets. It is one of the things that you can, the gold standard doesn't really exist anymore. It used to back in the day, but it is still sort of considered to a large extent a safety net, right? So when you're fearful, what do people do? They go to the safest places they know of, right? So that would be gold and the US dollar. So we've seen the dollar strengthen quite a bit. We've seen the gold price go up a bit. All PGMs sort of fall into that category. So palladium, rhodium is doing okay, not quite at record highs, but also sort of on the up. Platinum as well as gold are doing really, really well on the back of these fears where people sort of want to get out of equity market risk and find somewhere to park their cash that is going to be relatively safe and protected against inflation, right? Because what really happens here is, or what's really happening here is the price of fuel is going up drastically. I mean, we're looking at this stage, at least another R2 fuel price hike locally by the end of the month, right? Or next month, let me put it that way. So where do you put your money if it's in times of extreme volatility? Well, they go for the safe haven assets, and that at this stage is proving to be gold. Interesting. A lot of people would have made that argument that Bitcoin is the new gold. Turns out gold is the new gold.
Gold is the new gold. AVI has warned of escalating costs due to that conflict. Talk us through that performance.
So basically the rationale here is that one of the major inputs for AVI, obviously they're in the agricultural farming business, one of the big inputs for them is wheat, right? And if you look at the price of wheat, even in that, for example, over the last sort of 2 weeks has gone up by 50%. And we were chatting about it this morning. It's the impact, I mean, it sounds incredulous, right? Oil is up 30% in essentially a month. The price of wheat is up 50% in the space of 2 weeks. But how does this affect us, right? This is the price of bread. Every sort of baked good, this is an input into chicken, right? You want to eat meat, you have to feed them something, and that often is wheat, right? So that cost price inflation is going to start pushing up food prices as well. So that's essentially what AVI is warning us of, is that their profitability will be severely affected unless they can push the higher input price through to the consumer. And if that happens and the price of chicken doubles, for example, fewer people are going to buy it, right? So this creates economic hardship from multiple angles. And it also, it all sort of stems from energy and food price, food inflation. And the reason this is very, very big and very important is because something like 40% of Europe's gas is being supplied by Russia. 11% of the world's oil is supplied by Russia. Something like, I think, 40 or 60% of all the world's fertilizer is supplied by Russia. And the world's just sanctioned Russia, into the ground. So no one can buy fertilizer from them. And that obviously is a big input, again, into grain, which again goes into, further down the supply chain into other food stuff. So that cost price, or that sort of input price inflation, is really going to have a big ripple effect through the market. Again, if we can resolve this relatively quickly, we might have a brief shock of higher prices and then a relatively quick recovery. But if we have a prolonged conflict in that region and potentially even an escalation, so if NATO, for example, makes a move to establish a no-fly zone, we see a bigger escalation and this thing drags out for many months, we're going to feel it.
I wonder if we're going to feel it on the markets when it comes to cyber warfare, right? So a group calling itself Anonymous is on the offensive against Russia. Of what consequence could this be for the markets?
So Anonymous has actually been around for some time now. They often tend to take a bit of a moral high ground. They've been anti-US at one point as well. I think what's interesting is we're heading into a stage where something like Anonymous, we don't really know who they are because they call themselves Anonymous. I mean, they could be U.S. government-backed. They could just be a bunch of private citizens around the world. So we're really not sure, right? But what we've seen, for example, Russia do as well is they're sort of synchronizing cyber attacks with physical attacks, right? So it's a whole new type of warfare. I did see that Anonymous said, look, it's open season on Russian servers, so any server from Russia is currently, well, not any, but, I'm sure quite a few are currently under attack from hackers. So this is basically just to, remove services from the internet. So imagine, all the websites in Gauteng just stopped working, for example. So that wouldn't have too much of an impact on, your or my life. But for people in Russia that rely on these sort of services every day to perform their job or to buy groceries or whatever it is that they need to do, that could have a potential ripple effect. The sad reality here is that, yes, Russia is invading Ukraine and you're walking into someone's house and, kicking them off their own couch kind of thing. It's not a very nice thing to do. But the majority of the people in Russia are not the ones who are doing the action, right? And they're unfortunately the ones who are paying the price. We have a situation where there are hundreds of thousands of people protesting in Russia against this invasion of Ukraine. But unfortunately, groups like Anonymous, as well as all governments around the world, now decide, Russia becomes public enemy number one. They get sanctioned, then you get, essentially all the hackers of the world descending upon one country. It's really going to do lasting damage to Russia. The question is, how do we position for after this is over? Do we see a revolution in Russia and Putin get overthrown by the people in Russia? I think that there's a greater than 50% chance that happens. The other sort of question is, does Russia get NATO to back off, and does he get his way? So we're not really sure exactly how this turns out, but what is clear is that life for the average Russian is considerably harder, and I would argue that most Russians, individual citizens, normal people, they've got no horse in this race. They've got no interest in invading Ukraine. They don't necessarily want to do it. They don't even agree with it, and they're the ones who are going to pay the price. And that, I think it's a bit sad, to be honest.
Let's come back home and take a look at TFG. They've announced that they'll be buying the Tapestry Group, owner of furniture stores such as Choreographed, Volts, Dalabed, and the Bed Store, for a 2.3 billion rand. What's the significance of this acquisition?
Well, it changes the way that TFG or the Foschini Group earns a little bit. They move away from fashion retailer to sort of a more diverse, some home goods, furniture, that kind of thing. Chatting with one of my colleagues earlier this morning, the Foschini Group are one of the companies that have really gotten the online shopping thing right. It's kind of like Checkers 60/60 was first to the draw with the grocery delivery. Everybody else is kind of scrambling to catch up. TFG during lockdown really kind of streamlined their processes really well for online shopping, and that customer experience has been really good. So this could be a natural sort of next step for them to expand their product range and maybe lean into the online a bit more. I haven't really got too much details on the deal. I haven't looked at it that carefully just yet. Unfortunately, the European situation has been taking a bit much of my attention, but I think it's an interesting deal, and I think that it makes sort of sense to diversify your business a little bit. Consolidate some of the industry. It's an interesting time when the economic chips are down is generally when you see the mergers and acquisitions take place. So we've been seeing quite a bit of that type of activity. So we'll see how it works out for TFG in the longer run. Unfortunately, given the greater macro context at this stage, I don't think there's going to be much love or excitement in the market over these types of deals for some time to come until we know that the Russian situation is resolved.